losing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, into the charts we go. And BTC got that move to the upside more than I was expecting, but it wasn't more than what I laid out in terms of the liquidity pools which we've had out for weeks now. We'll go and check those in a moment, but first let's go into the let's take a look at what happened here. So we had a reclamation of the one level of the bearish trend-based fib extension level, which then shot us up beyond the 786 and the 706 and 0.65 resistance in a single daily candle, which is extremely bullish, which is showing a shift in the character, and perhaps even a bullish trend-based fib can be drawn at this retrace point. Where do we retrace down into? We will see by London and New York Open. New York is down a liquidity pool today as it is Memorial Day weekend for the States. So let's go into this diagonal fib level as well. We reclaim the 0.5, which is the equilibrium point of this upwards mean reversion path to the upside, and we are making our way to the 618, which also coincides with the 236 of this bearish trend based fib extension level. If you negate this 29243 level, then this bearish trend is over. So that is something to note as we go into the liquidity. What is the high block heat map? Well, that is when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And we get to see who those liquidated folks are, and we get to dance on their corpses and tell them they should pay themselves while they're ahead. So if we look at the pools we outlined as we are losing them to Father Time, we did outline these pools up at 27,382. We said it was very thick in this region, and we came and gobbled that without hesitation, and those guys are now off the tape.
Fatality.
Yes, and they get destroyed for not paying themselves when they were up and wishing for downside when it was they didn't lock in their gains. So as we see in this case, now we are currently 16 billion in an imbalance on this upside path. We had this $370 million rather in 100x longs, which opened up into the green candle here, which they promptly came back and gobbled up. So those 100x guys were off the table, but their partners in crime down here at 27,249 and 26,693 could be targets in the coming moments in time if we give this all back. As it stands right here, we have the 194 million at 27.9 even that could be gobbled up here in this green candle, which would be your fair value gap. So what are fair value gaps? Well, it's when liquidity is left in the charts to be gobbled up again. And we get to see that with High Block Capital, which is about $70 a month. So please consider liking and subscribing so you can continue getting this for free. So you get $226 million down at 27.72 on this minute time frame. So what was it we were aiming at? Why did we have a projected path to the upside, and why did they come this far to the upside? Well, we need to expand our vision to the higher time frames to get the answer to that, which we have been laying out for you day in and day out. This is why we talk about juxtaposing the time frames to see where the liquidity lies. And we were talking about on the 7-day time frame, you did have an imbalance to the upside, and we expanded our vision to the monthly time frame, and we also had a imbalance to the upside. As you see here, we had $40 billion up at 27.8, and they went even far higher, because if you go to the higher time frame, you will start to see that there is even more up there in that region. So there was $24 billion up here at 28.4, $12 billion at 28.2, and $18 billion at 28 even, and $32 billion at 27.8, which they came to gobble. Now, the path that we were looking at as a potential divergence play to the upside, if they decided to go lower, was down here at 25.6, 25.4, and 25.2. You have $150 billion waiting there, which we had outlined for you as well down here, these 41 days of consolidated long liquidity levels. And they did not come back. They reclaimed this wick of the bullish candle here, and they reclaimed that wick for a potential double bottom out of here. Now, this is False Move Monday, so you have to be careful about FOMOing into plays. I would wait for the retrace of this play to see if it is genuine or not. Once again, you have a lot of liquidity below on the 3-month time frame that suggests they could possibly come down and stab this now that they knocked out some 50x and 100x characters, so they could come down into this region. We are not out of the clear just yet, as you look at all of these big pools of 370 million opened up in 27.24 and 26.693. These could become targets as we start to retrace into the 100x pools here. So all of these 30 million, 80 million, 20 million, all of these guys that opened up longs late are starting to become the falling wedge retrace into their liquidity. And this is what patterns are. It's just all psychological traps through and through to grab liquidity, and we get to see where that liquidity lies. All right, so let's go into the Binance chart and throw on our oscillators and take a look at what we were seeing in terms of the play to the upside. So here we go. Let's throw that on. We'll put on our heads up display here. This is what is it that we're throwing on as a indicator. The link is in the description. It is momentummaster.info for more, and you can read about each component we go over by scrolling down to features and toggling the component, or looking at the entire toggled component in its glory with the flip switch. Okay, so you can turn on the flip switch or read about each component. We're going to go over each component as we saw it. So we were talking about the daily curvature here. Over the last few days, we were seeing this cloud angle starting to shift, suggesting that an upside play was inbound. We were unsure whether that would come off the liquidity of this and spawn some divergence out of here. It looks like they decided to send it regardless of that, and the angle is slightly lower than we had it, but still that angle of that curvature is suggesting a shift in the cloud. What is the trend cloud? Well, the trend cloud is a volume weighted cloud formula which expands and thins according to the amount of volume present in the asset. Price tends to gravitate and retest the cloud as a point of resistance or support. So it looks like we closed the daily candle above the cloud here on the daily time frame, which is kind of bullish on this narrative of the cloud, the volume weighted cloud. And what we were indicating earlier in the Sunday is we talked about the potential of reclaiming this cloud on the hourly time frame, which we did, and saw that upside play to these pools here, which are liquidated, so we can delete them, and these guys as well, which they liquidated, so we can delete them, and this fair value gap we had back since May 16th, which they liquidated, so we can delete them, and this BPR, balance price range fair value gap, which they liquidated, so we can delete them. And this is how you find these pools. Even if you did not have high block or did not attend the stream, you could be writing these fair value gaps and seeing them as points of interest. And they even came up to this one we had laid out for you since around May 8th. So they've had these pools, and I remember they were in the $280 million range, so I've kept them there, and they came back with the wick to that region. So that guy is now off the table too. His partner in crime is still up there somewhere, so we'll wait to see if that gets hit. All right, so as we see here on the 4-hour time frame, we were getting overbought on multiple oscillators. As we see here, the 4-hour was getting pinned by the lower time frames. Once you reclaim that cloud, it's kind of sayonara to the upside here on that cloud idea. Now the cloud is starting to curve to the upside and thin, suggesting that you will at some point make a retrace into that cloud. So if we look at where we started to make that impulse to the upside, it was about we could just go from wick to wick to be sure, and you could come down into the 618 if we want to be frugal, though we could probably move it to this where we started to make that decision to the upside here. So it's a retrace down into the 27322 region for confirmation of support, which also happens to coincide with the 786 level here at 27375. Could be a region of interest for a long if they recover this zone on the 4-hour time frame. Let's first do our due diligence and go to the weekly time frame and see how our weekly candle closed. I can delete this curvature on the daily. We got that idea intact. Shout out to everyone here. Yo, it's bumping tonight. We got 5 people in the chat chatting it up. What's up, Julian? What's up, APV? What's up, Dominique? What's up, Brett Moore? What's up, Dingo? Let's go. All right, so the weekly candle close is a quite bullish one, where we had a basic idea of an increase of 9% off of that play to the upside there. So a 9% upside play, and we're starting off the week with a little bit of a sell-off here, but that's nothing to worry about just yet. I wouldn't just hop in the shorts. Once again, before you enter into any trade, there is a thing called the power of threes. We go over it all the time here, and having 3 hits in either direction, so having 1, 2, and 3 for that upside play, and getting 1, 2, 3 for the fatigue to the downside is your smart entry. Not financial advice, but it is what smart money is about. Playing it smart and not just hoping for V-shaped recoveries in either direction. So it looks like the weekly has reset down to the value of, thanks to our screener here, 34 and 58 on the RSI. So the RSI is above 50, bouncing up. The money flow is beneath the RSI, which suggests that the money flow will come up a little bit more here to meet the RSI, as it likes to do. And if you backtest this, you can see the money flow getting some bullish divergence beneath the RSI and bouncing up from that point. So generally, when the money flow also gets above the RSI, it starts to gravitate back down to it, as it did here. So that's the weekly time frame. Now, if you see this alarming thing on the Williams here, are we going to see this? The angle of this is not an open beak just yet, so it could curve up and provide you with one of those multiple alarming events before the actual dump to the downside on the weekly time frame. If we go to the lower days, like the 5-day and the 3-day, this has reset some of the stochastic quite nicely, and some of the Williams to provide you with a possible double top scenario. The money flow has come beneath the RSI. We were previously worried about that being up above it, which did give us those 5 days of downside to come back down into. This is why having the money flow juxtaposed with the RSI on the same oscillator is not just a random thing to make the lines look busy, but for something for you to juxtapose and compare on the same oscillator. Okay, so if you look at the 3-day, you'll start to see that the 3-day is now starting to play out here. You have 2 days for the 3-day to close, and the money flow is beneath the RSI here, suggesting you see this continuation idea to the upside. The Williams is reset nicely as well. The average of the Williams could come down a little bit more, so you could see something where you did come up here on March 2020 and did continued higher, so you could necessarily take off by reaching up to the average here at negative 55. So yeah, it's something to note on the 3-day. And if we go to the daily time frame, I wasn't looking at the clouds on these. Sorry, let me go back and refer to the clouds on the oscillator. Turn off B and just look at how it looks with the cloud and whatnot. So the cloud on the 5-day is very thick and healthy to the upside path, as is the weekly. If we recall, the weekly was starting to get thicker as we were dumping, which suggests somebody accumulating positions at this level, even though we had this large amount of liquidity located below. Are these locations of the liquidity market makers? Are these big player positions that will not get knocked out no matter what? It seems very ironic that they left them untouched completely. So if we see on the weekly time frame, we previously reached resistance at the adaptive and the weighted moving average here. We pointed that out to you as we were getting rejected off of these larger time frame resistance levels, and yeah, we have to make our way back above them. And the cross down on the weekly baselines is also something that we were resisting for the last 3 weeks. All right, so if we go to the 5-day Momentum Master A cloud and all of that fun stuff, we can see that we had the cross down event that we laid out for you back here in April 16th, and we talked about that being potential downside, which it did. So we have to negate that first and foremost before there's a true path to the upside occurring. Now, we did have that here where we had a cross down event which brought us 10 days of downside down to the 618, and we bounced out of there and did the cross up event. So by the time this crosses up, you could see a large amount of play to the upside. So sometimes you do have to trust the lower time frames if you're believing the path to the upside will continue. It's going to be a while before these cross again. So that until that happens, you are in the cross down event, which has been playing out for a good month or so. If you go to the 3-day time frame, you're going to see that cross down event as well, but you have less time for the cross up to occur here as you start to see the leading moving averages of the baselines proving themselves as your first sign of reversal. Okay, so if we go to the cloud is also healthy and we're holding the super trend. So the super trend also has you at hello here with this line being just below the liquidity pools we had lined out for you. So these dynamic support and resistance included within the suite, which have been back tested to be true. If you notice here, it held that to a degree. This is default settings. I don't change them. So these default settings will have you at hello if you can close the candle on these time frames with these super trend levels intact. So they're so far intact, so the trend is still bullish to the upside on this 3-day time frame. If we go to the daily time frame, you'll also possibly see that shift have occurred to the bearish level when it broke this level here, and then we started to keep in mind the shorts at the 236 because of that 236 failing on this bearish trend base fib level, and then this super trend showing the bearish level here. So if the bearish trend will basically continue on this path if we cannot break above 28,601. So this ATR level is basically 2% away from where we are. If we go up 2% more and hold that level, then basically the ATR, the super trend will shift to bullish on the daily time frame. If you look at the oscillators here, we are making this momentous attempt to the upside in terms of the upwards momentum here. We are at the value of 94, which is showing you to be overbought, but you still have room to move on the Williams here, and the leading MACD formula has crossed to the upside. Quite interesting that Asia stepped up to the plate here. I've been hearing ideas about the debt ceiling removal and Hong Kong and Asia trying to get their chunk of Bitcoin due to the debt ceiling being removed or altered in some way. I don't really follow news in such detail. I believe it to be a distraction from the truth. All right, so if we look at the 22-hour time frame, this is also starting to shift, and seeing this candle close above this is something to note. If we take a look here, we are also at the top of the Keltner channel, which is an ATR based Bollinger Band type idea, which provides you with dynamic support and resistance. So we are at resistance on the 22-hour time frame. When it is bullish, it does something like this, where it creates a ascending channel alongside the Keltner channel, which goes up with it. In similar fashion, if it descends with the Keltner channel in a bearish time, it does something like that. Not saying it's going to do that, but you watch it hug and ping around within this outskirts of the Keltner. And you're starting to see this thinning of the cloud and the curvature intact on this 22-hour time frame, suggesting you will continue. Now what you have to do is come back and kiss the cloud to continue that. How do you kiss the cloud? If we come back and adjust this down below, that would be of this entire path to the upside at 26,844. Not necessarily going to happen, but that's generally what you see. If you come out of the cloud, you pierce the cloud, you come back, you kiss it for momentum out of there, and then if not, you fail back down below it, and you try to find support on this cloud as you try to shift the narratives. Now this is the unsyncopated rhythm of the 22 hours, so that gives you that sniper entry when this resets on these Williams and stochastic, which other people have liked to co-opt because it's back-testably true, but that's why I call it the treasured 22. If we go to the 12-hour time frame, you will see that the candle was a vector candle under the PVSRA strategy. It was 200% of the previous 10 12-hour candles of volume in that single candle, expressing that was an extreme amount of algorithmic shift to the upside. So are we going to immediately come back and Bart Simpson out of here, back down to the downside? I have no clue. Once again, we are on false move Monday, So you have to be wary of the move being false in either direction. So is the false move going to be the retrace and then they actually continue and send it out of here at the 706 level? That is something we need to bear in mind as we look at these other time frames. Now, the cross-up event on the 12-hour had you at hello here on Friday, and you had the cross-up event, and we're maintaining these baselines in a nice manner. Now, I don't like to necessarily short when the momentum is like this on the 12-hour and the higher time frames. I like to see these cross-down events and fatigue points in similar fashion here on Sunday, April 16th. If you remember, we were shorting Bitcoin up here and talking about the cross-down event. Even amidst the fake out here, it maintained the baseline fatigue and crashed to the downside. So it's these type of plays we want to catch in terms of shorts, not the scalps which could explode in your face. So I am chilling and waiting to see if this continuation will hold and possibly find entry on a long idea, since this is what you normally like to see in terms of A, B, and C your way out to the upside for corrections. And this is what you standardly see in smart money, as well as a choach or change of character, and then you have the retrace into the order block, whatever that means. In Momentum Master, that would be the kiss to the cloud, or the 618, or the golden pocket. There are many ways to skin a cat, and there are many strategies which say the same thing. Just like the Eskimos have 40 words for snow, you have 40 ways to trade appropriately, and they're basically the same idea. So if we look at the 6-hour time frame, we will see that the 6-hour also had that vector candle. Normally the vector candles come in threes. You see this one here, green, green, green. You have 3 vector candles before a reversal. So we have one vector candle which has held. So are we going to see 2 more 6-hour vector candles? That is the question. You are getting overbought on the money flow and the RSI here on the 6-hour time frame, so I would suggest you chill out for a little bit. They might even go sideways for the entirety of Monday as the false move, and wait for Tuesday, Wednesday liquidity pools to continue. Who knows? So the Williams also getting overbought here, not necessarily your entry point for a long on the 6-hour time frame. If we collapse ourselves down to the 4-hour time frame, we will see the same result, and possibly a cross down event starting to occur. Not yet. The baselines are holding quite nicely beneath the price. This is something that is showing signs of strength. Now when you see the baselines fatiguing and the price is closing beneath the baselines, that's when you consider shorting. Don't just look at the stochastic RSI, as other YouTubers might like to say. This overbought status can be pinned. You can get it pinned by seeing the baselines showing the momentum to the upside continue. This is why I turned down the opacity on my candles, because these prominence of the baselines are quite important. So this is still good until it's not. Until these cross down, I'm not considering shorting this just yet. Now you are getting the overbought status of the money flow and the RSI. You could still come up a little bit more. You're just reaching the cusp of being overbought, and you're getting overbought on the Williams as well. So the 6, the 4, and the 12 are not in your favor now. You're previously receiving dynamic alerts to our phone as we are breaking out here, and we're looking for candles to close in that state. If we go to the hourly time frame here, you're starting to see some bearish divergence play out here on the money flow. You have some higher high with a lower low on the money flow, which is suggesting a chill out event from this point, which is what's happening over the last 4 hours after we had that stab up to the liquidity pools up here. So the hourly time frame looking to reset here. What does it mean to reset? Well, it's going to reset the oscillator while it starts to contemplate the pinging of new liquidity. And then we go into this and see who's entering from the ping, or who's taking the bait, on which side is taking more of the bait. Is it the shorts or the longs? And based off of that idea, they will start to continue or retrace some more. So as it stands right now, they still have a little bit more to go down into this 27.9, even 906 region. They have $194 million to come back to easily without thinking twice about, so I assume they will continue in that direction. Also have a pool. Let's zoom into that. They also have a pool down here at 226 million at 27.726 that they could retrace into without hesitation. They'll do a bunch of pinging around, maybe bounce up to get more bubbles to open in longs and then come back down, but I expect much of a retrace at least into the 27.72 region. Let's write that down as a potential area of interest, 27.72. Okay, let's just keep it at 27.724, and let's say there is $220 million down in that region, as is up here at 27.900. So there's another guy at 27.900 here. So there's 200x pools, which we all know they like to come back to without hesitation. So why would they not, is the question I'm thinking about right now. And then people will be drawing their bull flags and stuff and trying to FOMO in here. But realistically, if you're healthy, looking for healthy longs, you'd be thinking about it in a little bit more of a retrace area. If you're conservative, you could do it that way. Okay, so we're going to see how this cloud kiss idea holds. Are we going to come back in and hold this ATR and bounce off of the 706.65 over here and reclaim this resistance as support at the 786 level at 27.375? These fib levels on the bearish trend-based fib level will be something to take note of, whether we confirm them as support. And these dynamic levels also have been price action resistance on our bearish path to the downside. This is why we've had this path laid out for you since April 26, and these fib levels have held true down to the 236 failure here. So this is what I will illustrate to you how to do again. So let's go back and set our daily time frame retrace idea. And this is basically your ABC2, but with a little bit more finesse and minutia inbuilt to that ABC. So what is the ABC? Well, it's basically an impulse, retrace, and continuation idea. Sorry, my computer glitched. So in this case, the C was down to 25K. So this retrace being lower than the initial impulse here, the retrace to the upside did not make a higher high. And so in this case, you use a trend-based fib extension level in your fib retracement tools. You favorite that, and then you can do 3 clicks, impulse, retrace, and based off of the length, the strength of the impulse and the weakness of the retrace, it will inbuilt some math for you. So in this case, we had this drop to the downside and this retrace to the upside here, and that projected out some math with the 236 levels intact, which we saw failure at multiple times for the short. And then we went down into these 1 levels and maintained this 1 level at 26.651 as a support structure, which we failed at to try to get to the 1382, which we could not do just yet. Okay, so is this negated? Not necessarily, which is why we won't delete it until we flip the trend and confirm things as support. And then at that point, based on the retrace here, we could do it in the other direction. Just catch what I'm doing? So like what we're trying to do here is we're going to see how this resets or holds, and based off of that reset, you can get a bullish trend-based fib level. So like you could have done that here, for example, if you had considered this the retrace here, then it would have had you at hello for going to this 1618 level of that this rise retrace idea, and it projects out these paths where you'll find resistance like at the 706 and the 0.65 here, which we did, and we surged beyond into the golden pocket and beyond into the 1618. Now if you look at this for what it is, you could basically see now that we have that impulse to the upside. Now you're waiting for the retrace, and you try to see is that going to be something that we hold? So like, let's say we come back into this cloud on the 6 hour /618 down here, then it will give you a level to look at in terms of the 236 for that other path to the upside, which also happens to coincide with the 786 here, and you could find where we could possibly project out into, which would be upwards of the 30k region. Depending on how deep the retrace is, this math will change, of course. So if the retrace is deep, then your projection to the upside is shallow. If your retrace is shallow, then your projection to the upside gets bigger. So based on the retrace tells you how big the move can potentially be. We have not retraced or seen divergence and reset of the oscillators just yet, so this is what you would be waiting for, ideally speaking. Could this play be continuing into the day of London? We'll see about that, but basically what you'd be doing is looking at the lower time frames on Momentum Master and seeing how this hourly time frame resets. As you see, the baselines are fatiguing here above the price, which is what we were talking about, the baseline fatigue. So it all starts from one time frame or after another, and they cascade upwards. So here you're starting to see the fatigue of the hourly here. So if this crosses and gives you your DNA helix, then you can expect this to continue further down. And so you wait for this hourly to play out within its own fractal-like nature. So the baselines will cross down and retrace down similar to this. Now, what is this image of that I traced over price action? This is Bitcoin's local bottom before we knew it was the bottom at 15k, because it was displaying rocket ships and all that fun stuff on our oscillators. Now, we had that impulse to the upside, and then based off of the retest strength and the cloud coming up to that showed us that we would continue. So that's what you'd like to see. This pattern within the momentummaster.info template of the schematic has within it everything you'd like to see for that play to the upside. Now, we could just give this all back and just go into these liquidities and kiss this cloud down here as we speak. Generally, with a true short, you'd be seeing one, and you'd see another stab up here, and then maybe you see another third hit before it goes down. So you'd have this downwards action come up, consolidate, and then you'd stab up before you come down. And that's your shoulder, head and shoulder idea. So then your safe entry would be with the cross down events. But if you play it a little bit more risky, you could just take the cross down for what it's worth and just put stops into profit. Now, after a move like this, I like to assess and see what it does on these lower time frames too, because you got to give them their credence, because the 15-minute cloud is actually thick here, so you could see a bounce and create that second hit to the high. One cool thing about our oscillators here is we had you at hello with the nuke that closed in locked in position here on the 15-minute with the cross down event. So if you were watching this around the daily weekly candle close, you would have seen these fatigues on this candle, and the baselines had you at hello for that short idea with the nuke into the liquidity pool we laid out for you. So are we going to continue lower into these pools? It very well could continue into this level and at least stab into these 100x characters we pointed out to you here. All right, well, I think we will come back to you because New York is down a pool of liquidity. We'll still stream as usual, but we could take it a little bit more slowly. So I'm open to questions on what you want to look at, and then we'll call it a day for now. Anyone out there have anything they'd like to ask? Yo, what's up, Mardos? Julian Simpson, I like the name. Booyah, do you guys have anything you'd like me to look at or any questions at all? So we're just watching to see what the 15-minute does in terms of resetting. The 15-minute getting pinned here. Why is stochastic RSI not good enough? Well, stochastic RSI gets pinned, as you see here, and on the 4-hour time frame with this move to the upside. Now, certain streamers will just say, it happens, it's just how it happens, mate, and they don't tell you why. But there's other momentum oscillators at play, which they stubbornly overlook for whatever reason, because it doesn't fit with something they discovered because of their ego. But what we're going to say is, like here where you have this triple top on the 4-hour, is because you had the rising sun and the cross up of the baselines here, you had this momentum in your favor for upside. So seeing this buyback wick on the 4-hour time frame, holding the cloud, seeing the Williams pushing up here, gives you the impression of the suppression of the 4-hour time frame, and also seeing that the 22 and the 12 and all these other time frames had this passive support, if you will. That's when you start to see these stochastic getting pinned. So using just stochastic RSI alone is going to get you wrecked. So that's why we look at other things in the Momentum Master suite in Confluence. It's all about Confluence, which is why we also incorporate liquidity. We don't guess about measured moves. We give you the actual pools and the actual measured moves of where these pools are being targeted. So as it looks like right now, they're going to target this 100x guy, and we're going to see it knocked out as we speak. And you get to see a fatality occur here live. We're seeing the red PVSRA enter just as people are drawing their Mario flags and calling for more upside and getting like bullish and being like, yeah, to the upside, 40k, yay. Like, you gotta take it in stride and be humble and know where the liquidity is, and see that they're targeting these 100x characters who entered late on these green candles. So it makes sense. And that's what this resetting of the Williams is about. So we're seeing this come down into this, and we can watch this update live where it cuts the string to this character, this 100x pool we outlined for you before it occurred. And it just happens like this all the time. And I'm not going to ask you to, give me accolades. This is just how price action works, and I hope you can find it to a T yourself, how they knock out these pools. All right, so this 194 at 27,906. Are they updating to these guys just yet? Almost wicking off of that. I wanted to pierce through more aggressively so I can say fatality. Come on. So this is the Asian range. If you're having trouble, I heard somebody ask a question in the Momentum Trading Lab Discord about when certain plays take place. This is the ICT kill zones by Tradinator. If you look at it on the 15-minute time frame and under, it will tell you when the Asian range, the London range, and the New York range all start to happen, so you can start to get a sense of the liquidity pools between the world markets. 3 minutes for this 15-minute candle to close, which also coincides with the hourly. So we'll get to see how that hourly basically gives back some of this and resets some of the stochastic. So their current stochastic value, as we see, is 57 on the hourly and 3 on the 15 minutes. So when you close out the candle, as we do, we rarely have done that recently on the live because I've been so focused on the futures market. So we'll get to see that as we did back in the day. So we'll see if how much of this resets. So watching how the hourly how much of this it resets and where this number moves to gives you a sense of how the interplay of these previous 14 candles play into this candle. It's kind of like a subconscious event that you can only see in the moment, because if you play replay mode, it moves fluidly and you can't really tell how much was given by what candle. So it's a thing you get to see in the moment that you don't get to see in replay mode, basically. So we'll stay here with you until the 2-minute close and see how much of this hourly stochastic is given back. And what that does after that red candle closes in such a state, it triggers algorithms to continue down out of fear of losing profit, and people close out of a panic and cause this to come down some more, and then there's some order blocks to potentially bounce off of. So you're still seeing, let's see if you have any questions. I'm not aggressive with leverage. Are there certain patterns or trades I should be getting into over others? Well, good question. So finding the bigger pools and kind of coinciding them, I don't know if you have the Momentum Master or not, but if you coincide them with the outskirts of the Keltner channels, when you come out of this channel and you're seeing these cross up events, generally when you see the second leg of a W and it's like an extended leg out of there, this is what people call the, this is an ABC inside of an ABC. So you have like a they kind of retraced into a C. So you have these different, getting the second leg out, having at least a double bottom or a triple bottom. You have a shoulder, head, and a shoulder. This kind of, you have this kind of double hit and getting in off of this second hit. It's the same thing over and over and over. This schematic on the website is just what you look for. So getting in on this rounded out price action for a long and a rounded out top for a short. It doesn't matter whether it's short or long. It's being on the outskirts of this channel with the cross down event and seeing the price action close beneath the baselines in that short case, close above the baselines in the long case. And we were talking about the daily cross up event. Like the higher the time frame you have, for example, on this cross up here on the daily, like, yes, we did have $150 billion rather down here, but you were seeing this buyback wick here and the cross up event, suggesting if you hold this baseline, which we did on May 25th, Thursday, then you could have just thrown a long with a bit of lower time frame point of interest cross up event here, because you are reaching the bottom of the Keltner channel, which also happens to be this liquidity pool. So sometimes you won't always get that divergence play on that time frame you're looking at. It all depends, but generally getting that divergence, it looks like we had divergence on the daily time frame here on the RSI too. So if you had this divergence play, you playing it with divergence and this double bottom, getting the double bottom idea is generally more secure than this one. Hoping for the V shape of, like, as you're dropping for the first time and just bottom fishing, catching a falling knife, that is a very risky play unless you really know what you're doing with fibs and things like that. But if you have this percolation of the play and you're getting double bottom events and you're getting right in at the bottom of the double bottom, that's generally less risky than this play over here, and normally pays out better too. So in terms of getting at risk, and the same thing with the shorts. If you recall, I was shorting back here on some cross down events on the 12-hour, and I was talking about the failure at the 236, and they played with me. I was like negative $200 on one of these plays, and I said the baselines are holding, so I'm going to stay in this, and then I took that short to the downside. So it's just about the probability being in your favor based off the fatigue of said time frames being aligned. And this is where in Momentum Master, if you have the stochastic array, you get these rocket entries and these nukes. So as it stands right now, we are having a nuke that did close on the 15-minute time frame. I'm just not sold on it just yet. I need to see more information, but if you recall, we had this nuke that closed here and this cross down event. So the probability of taking this as a scalp was much higher than taking it when these baselines are beneath the candles. You see what I mean? So the candles, the baselines need to be above. You need to have this higher time frame fatigue in alignment, and you need to be hitting like a higher time frame point of interest pool. So if you get the pool, you get the divergence, you get the fatigue of all the higher time frames, and you're outside of these ATR based Bollinger Band type things, then you're more likely than not going to come back into it to at least retrace into some of these liquidity pools. And so with the strength of the move here, I'm not necessarily sold on the short, but with the higher time frame pools down below, if you believe that we're going to continue into bearish territory, then that would be a good entry. And as long as you protect your entry and move your entry, your profit stop loss into profits, then it was a win either way. So it's all about trimming and protecting. If you have the proper strategy at hand where you protect your entry and you experience very little drawdown at the point of entry, then you're doing something right. And it doesn't matter whether you're taking it as a scalp or a swing. There's many types of traders. You could be a swing trader, a scalper, or a day trader. There's all types of intraday. There's the breakout traders, better known as neophytes or noobs, however you want to put it. So that's about it in a nutshell. Let's go see how the candle closed, shall we, on the 15-minute. So we got the money flow to come beneath the RSI here in a significant manner with that candle close. The Williams is starting to reset in a nice way on the 15, and this is how you start to build your narrative structure back up for a bounce to the upside. Now generally with the same thing applies with the short. So if you see this cross down, which is confirming on the hourly, you're not going to just dump Citi out of here, although that does happen sometimes with your Bart Simpsons and your liquidity grabs. But more likely than not, if it is a true short, then you'll see a double top of some kind before you fade. And this is where the power of threes comes into play. So you only have one hit to the high, so you need to see at least two more of some kind for that ultimate safe entry, if you will. You are getting the cross down event on the hourly. The hourly has reset from, I believe it was at 80 if I'm not mistaken, now down to 25. So that was a significant amount of reset within that 1 hour candle close in 3 minutes that we observed. But you're getting this cross down event occur, so this potential suppression, which will cascade to consolidation, if not a dump, is what you're looking for. So you're basically on the side, for me anyway, I'm on the sidelines just waiting for this reset of these time frames and some divergence to start to appear and show itself, and see how many of these guys they absorb. So as it stands right now until London will be in about 3-4 hours from now. So does London continue it to the upside here without New York to answer the call? That will be the interesting thing to note on the kill zone event of London. I'd be surprised if we don't take it down a little bit. And this is where you can start to build a channel. So some people draw flags, and that's how you get wrecked, in my humble opinion, because if you were drawing a flag here, then it would have come and eaten your stop. So these Mario flags are no bueno in terms of looking at price action. You want to try to capture it in these kind of channels. How do you do that? Well, you can use you can go over here to your trend line tools, favorite parallel channel and regression trend. If you're having trouble putting it into these parallel channels, you can use the linear regression tool here, the regression trend, and it's literally 2 clicks and it will put that in a trend for you. And yeah, you can adjust those accordingly, and it will adjust the channel accordingly. And so you can have these in these channels, which you can see the equilibrium point of that you're failing below, so you could come down to here. Alright, I just want to say fatality. I want to see them hit that pool and at least call it a day. So this is where you're seeing the baseline cross down. It has not yet closed with this intact. If it closes with this intact, then you'll see more aggressive push to the downside here. So the baseline gives you that leading idea, and then you can kind of trust it or not based on the back testability of it. Okay. Any other questions? Let's see. Understood. So and this reclamation of the adaptive. For example, here, so there's never a time, like there's times where it will get rejected here, and this would have been your top, and this would have been your cross down, and you would have seen this dump to the downside here. Now, where do you see that being negated? Well, if you have the hourly closing candles above this adaptive, you've now just SR flipped this adaptive moving average here on this time frame. So even though 6 time frames were overbought and you had the cross down event, why did we continue here on the outskirts of this Keltner channel? Well, you had to contend with this adaptive play that we had closed above. Now, if you were closing beneath the adaptive, similar to here, then the dump would be inbound from that point. But we maintained the adaptive with strength, and then we saw that upside play. So this is where the adaptive moving average starts to play out in your favor against the idea of shorting it here. So having different things like the adaptive moving average, different things come into prominence at different times. And so having that ability to juxtapose and see which thing is the prominent thing we're looking at here. So if you hold this 4-hour adaptive now, which we have reclaimed essentially, as long as you hold this adaptive at that 27,724 level, which happens to coincide with that pool of 100x down there, if you maintain this adaptive in some way, shape, or form on the 4-hour time frame, then that's ultimately bullish. And if you use standard fibs and stuff like that, you could be more patient for a conservative play down in these regions, but it doesn't always go there. If we even look at it on this thing, like where did we hit? Like if I take this all the way down to the bottom here, we basically came to the 618, this golden pocket, in the reverse manner and wicked off of that golden pocket zone. So on a smaller time frame, are we going to come down and wick off that golden pocket zone down here? That would be your kind of ideal lower risk idea if it eats all of that liquidity here down to 2669-ish. 2669 would have you all the way down into this zone in the 706 region. That would be your ideal thing if it ate all of that liquidity and pinged a bunch of shorts. And if you're looking at this, you do have that pooled 150 billion down below that they didn't take just yet. So is this a stop loss hunt before they go down lower? There's always something to mind, but eventually you got to pull the trigger and trust what you're seeing one way or the other. But that's on you and what you're seeing. All right, we'll be back for the New York, because New York is down a pool. We'll just see how it chilled out and how London treated it, and we'll see how it's going. But the China and Hong Kong kind of wanting to FOMO into Bitcoin idea, which I've heard about, is kind of possibly a narrative that could exist. Even though China does like to say they banned Bitcoin, they are trying to stay against the hegemony of the dollar. So that's one way to do it if the debt ceiling has been raised. So it makes sense as a narrative piece to spout about. So we'll keep that in mind as well. All right, guys, that's it for today. I will see you soon on the New York Open. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will do the same, bringing you the fire, the precision, the accuracy, and all that fun stuff without wasting a single second of your time. And we will catch you on the flip side. Peace.